Hello, hello. How we doing tonight, guys? Sorry if I sound a little weird. I am pretty tired, so it's gonna be a weird one. Can you guys hear me all right? A quick little sound check. Just give me a heads up in chat. Awesome. Awesome. Thanks, Oliver. I spotted that. All right. Well, we're going to start very easily on the weekly chart, right? Because that's where our weekly outlook started. And I just wanted to give a little reminder, right? A little way back, if I can say it like that, about what we expected based on the previous week's closure, right? When we dive so high up and then decide to retrace lower so aggressively and even close below previous week's high in a bullish condition, it indicates some sort of retracement is to be coming. And then ES aligns with the fact that by forming a very bullish fair value gap, as well as NASDAQ, right, we could see some sort of retracement with divergence, right? We see that NASDAQ, as always, right? I've been saying it probably since the end of May, but at least we have been consistent. NASDAQ has been weaker while ES has been stronger, which is usually what happens coming into summer, right? So definitely for summer, ES has a little more strength, but don't want to deep dive into this. Just wanted to showcase the fact that our logic that we go through in our weekly outlook actually leads and translate to price. If we look at a daily chart, that's where it's truly beautiful, because at least for some of my students, it will be easier to spot. Not talking about the SMT here. I do just want to plot it up, showcase the fact without any clear precision, there was a lot of divergence at the high we just put up. And we did have also divergence between, if we look here at yesterday and the lows from last week, so Friday. I don't know if it was last week's lows. So no, not last week's lows on ES, but the swing low formed, the daily external range liquidity. We failed to reach it yesterday, but with ES being stronger, you could anticipate that it would catch up, and that no, it's not SMT. It's just temporarily ES is weaker. Well, it's weaker to the downside, so I guess it's stronger, so it's having a hard time falling down, if I can say so. Now, where I did want to bring your attention is at the fact that we just took out external range liquidity, right? And after taking out a ranges extreme, what do we expect that we do, right? And the best way to point out stuff like that to me is previous week's high, right? So this is previous week's high on ES, and as we can see on the NASDAQ, we did not take out previous week's high, which formed the SMT we were looking at. But after taking out previous week's high, you expect price to retrace into a range. Now, if we look at the most recent range, there is no clear discount in efficiency. And even when going to a 4-hour chart, there is no discount in efficiency that has my attention. Why is this fair value gap unimportant to me? Because of this huge displacement before forming it. I see this as a way, this fair value gap as a way to rebalance this, which is probably a little more advanced of a concept, but that is why I disregard it. So whenever price is unclear in the small range, we understand that it's going to refer to the larger range. In this specific case, we had a clear discount and efficiency, which we went for today. I just wanted to showcase the logic behind establishing a draw. Now, if we look at the same thing on NASDAQ, and we have our discount and efficiency that we already tapped into, right? So this area is balanced. So you could anticipate it to retrace deeper, and those are where OTE levels come in, and then utilize the combination of this fair value gap alongside the order block to the left to form a bias. But Wednesday we closed below it, so this inverted fair value gap framed setups lower. So again, I'm bringing you guys along all the thought process that goes behind something like this, right? You have to envision every possible outcome to then go in a lower time frame, and now we can truly analyze the day's PA, right? I did just want to showcase these specific arrays and have them up. Not 1 hour, 15-minute chart. Looking at today, we had one very simple thing. That is the first thing that came to mind when I opened my charts this morning was our London framework. Now, with such a tight London range, it doesn't leave a lot of room for framework, but it was present. So that was the first thing I was looking at. But as I just explained, we are also within a daily inverted fair value gap. I am anticipating that price will continue towards liquidity as it has failed to offer fair value at these inefficiencies, right? Price only moves to rebalance inefficiencies and target liquidity. If we are disrespecting our specific inefficiencies, right, in relation to premium and discount, then I can understand that we will be targeting liquidity. Where is the closest liquidity? Well, we have sell side right here, and more specifically, low resistance towards this sell side, which we failed to hit, of course, with hindsight, easy to tell. But my objective still remains lower, which I believe was a weekly swing low. Yes, weekly swing low into the fair value gap. We'll see more once we get there. But clear lower objectives, if I can say so, right? ES, same thing, looking at the discount and efficiency, which I am going to mark out correctly. Daily fair value gap, hello. I am just going to change the visibility here so we can see it. 1 to 59. If ever you guys are wondering, just TradingView, you can use the visibility settings to know which time frames I want to see certain things, and then you can just create templates with these, and it is fucking awesome. So looking at this daily fair value gap as our draw, right, our first discount and efficiency, we had half the day's range, right? The morning session there. And on NASDAQ, we had 2 liquidity objectives, which you did expect to be low resistance, but we are talking about higher time frame swing points, and time is of a big value, which we'll look into in a second. So clear sell side objectives. Now, as we can see right here, through the use of the London framework, we did complete it. We just did not take out the liquidity, right? So specifically, we had 830 news, unemployment claims. So let me actually prop this up on the chart just so you guys can see. Not much of a movement, but that is to be expected with unemployment claims. I believe I spoke on that subject in the past, but unemployment claims is the only 830 news that I don't start trading at 830 because it tends to have a delayed Judah swing. Just study any unemployment claims news and you'll notice that the manipulation comes with time. So definitely we had a nice Judah swing over, not taking out London highs, but reaching London highs. So that is where forming equal highs, you have to understand that price is fractal, right? And I believe it was a tick away, if I'm not mistaken. Oh no, exactly to the tick. There you go. So whenever you're forming equal highs like this, what I mean by understanding the fractalization of price is that you have to understand that we might not revisit these up until very much later, right? How many times are you taking a trade that is in a 15-minute chart, and basically from that specific trade idea, you're targeting 15-minute equal highs, right? They remain open sometimes, right? So you have to understand the fractalization of price and how it might not go target certain things right now, even though it might be a later draw. So forming equal highs doesn't make me scared to short. It just leaves that idea in my mind, right? Because if we look specifically at those times, and more precisely at the 9:30 open, we have a beautiful unicorn, right? I saw a lot of people trading it in the Discord this morning. Our time frame point of interest, our daily inverted fair value gap, we are rush on price, and then you have a beautiful fair value gap right here, which formed, and combining the volume imbalance, as we always do, you have a beautiful unicorn entry model that just formed perfectly at 9:30. Right, you would have waited until 9:30 because you do anticipate a Judah swing, but at that 9:30, just before through consolidation, we formed a balanced price range, and respecting that balanced price range, more specifically, we opened here, traded high above it before expanding lower. That is a clear indication for me that we are willing to go lower, and we loved equal highs this morning. Now, this entry might not be the best for everyone. Why? Because it is precise at 9:30. Maybe at that time you're waiting for the Judah swing to form your idea, right? This comes through experience, sometimes luck, sometimes speed, whichever, right? So another valid entry would be just below, right? Why? Because all of this PA is just one big range, right? And you can use the end of that range, let's just say I prop up standard deviations on it just for fun, as your manipulation. right? So that means that all of this could be a mitigation range, and you can utilize any breaker block, because yes, those are breaker blocks. I tend to regard them as mitigation blocks because I don't like using old breakers, but they are breaker blocks, and understand that this PD array should be respected if we are to go lower to our objectives, which at this point in time, I would be targeting the relative equal lows. Well, I was targeting. I did take this short this morning. I just shared it on Twitter. Oh, nice. My voice came back. I just shared on Twitter my day on my new Top Step eval. So if you're wondering, I'll post more details there later. Beautiful alignment, standard deviations in close proximity, a clear framework of a low resistance liquidity run with all these failure swings to the left, low resistance liquidity run into my objective. Even if taking this trade at the second fair value gap, right, in this specific case, and you would allow for 3 PD arrays. Now, at this point in time, you don't have any inverted fair value gaps up to this level, which lines up with your second PD array as well. So I would actually have my stop at this point in time, because your stop ends at this inverted fair value gap right here, but I want to allow it to trade up, but not dig back into this wick. This whole area should already be balanced. So the actual stop would be at this wick, because if I see it trade back into this area, it should not need to, right? Because that area is still balanced. Now we're going to use a pessimistic stop, as we always do. And I just wanted to showcase how even the pessimistic stop gives you over 2R, right? So I was going to say right at 2R, but just slightly over 2R. So definitely beautiful trade idea here. And of course, it's always going to be better if you entered beforehand, more specifically at 9:30, and then you would have had a very tight stop at the high of this candle, allowing for it to trade into this fair value gap, the next fair value gap, and the order block, or this inverted fair value gap. I put my stop specifically at this high. You have 4 PD arrays as defense, if you'd like, right? I like to use this word a lot. Would have offered 3R more, right? So that is the difference in precision between not a more experienced, but a more confident trader compared to Nat, right? One thing I did forget to mention is the divergence. If you look at my cursor at the moment, you'll see this swing high and these swing highs to the left. There was a lot of divergence here, which gave you additional confidence that this entry was indeed valid and that you could trust that this would indeed deliver to your relative equal lows. And later on, of course, you had sell side liquidity objectives, which we induced before retracing and continuing. Now, one thing I did want to talk about, because I was in general this morning, right? I was talking a lot. And one thing I said is that I took a long here. And more specifically, I'll showcase it. Just another unicorn right here. Retracement into our unicorn, which is this fair value gap. I took this trade. I had a very tight stop in this specific case, but I did take this trade, and I do believe it is a valid trade, right? You have your 10 a.m. open right here. Should I mark this out? 10 a.m. open right here, confirming your idea that we could now go higher. We just formed our equal highs that we pointed out, right? This is equal to London highs. So I'll just mark them out as an objective, sorry. So this was a valid framework. I was looking for a move to these relative equal highs. And I'm not saying this is a good framework because I took it, right? And yes, there was SMT. There was inducement right here, but there was also SMT, which means I can disregard that inducement. And the only thing I don't know is for how long, right? When will it then use these? The same as the equal highs it formed above, right? If I just move these to the left, let's just mark it out for what it is, equal highs. If I use these equal highs above, then I don't know when it's going to go target them. I can use those as a target for a high probability framework in line with 4-hour power of 3. SMT is present. I have my unicorn entry, formed the breaker once we traded above this this box right here. Then 10 a.m. open, low, expand to a high. This idea was valid. And if we look more specifically, right, because on the Rise model, we have 2 specific objectives, right? You have your low-hanging fruit objective, which can be found by looking at a 5-minute chart, your current range, you're going to look for a retracement into that range, and you have a high probability order block here. More specifically, I was targeting the opening price. Since the opening price was in premium, I would have expected it to retrace at least to that level. If we use the correct consequent encroachment, not premium discount, you'll see that it pretty much aligns with the opening price. So that was my draw. That was my objective. Because if we head over to a 15-minute chart and look at the same range, which for some reason I cannot see, but if we look at the 930 open right here, I was not expecting it to later right here retrace further because we had a huge intraday fair value gap right here. So it was either going to run aggressively through it, and then my 5-minute objective, low-hanging fruit objective, was going to be correct, or it's going to respect it as we saw and continue lower, which was the other possible outcome. I would like to see it take London highs beforehand. That was my thought process the morning. I was going to look for something like this into a lunge consolidation to then go take out the highs and next move on to sell side, but we did not, right? We were rushed to go lower, and as I believe I talked about it before, I don't know if I did publicly, but I was looking for an expansion through the monthly open, which we were exactly at those levels pretty much. Let me just be on the right spot. I'm still a little rusty on the charts. But if I look right here, 1st of July, and I point out monthly open, you'll see that today we were playing around that level quite a bit. Going back to a 1-minute chart, you'll find it right here. So whenever we were going to revisit the monthly open after we just opened into an expansion, I was expecting us to move aggressively through it, right? Because we do have to put up a monthly candle, and just like any 4-hour candle that expands aggressively forms some sort of devil's mark, you expect it to be used as a draw later on. But enough talk. If I just put my stop at the right spot, I just noticed I did not. You have your fair value gap, you have an order block, and you have nothing below but the SMT. So you place your stop at that swing low, which made this 5-minute order block only 1.66 R. Does that mean I cannot take profits? No, not at all. I am going to take profits here. I want my minimum framework, which means to my objective, my full objective, to be 2R. If not, the trade will not be valid, but I could allow it to go 1.6R to a low-hanging fruit, take some profits there, leave the rest to be stopped out break even, or in my case, I trailed very aggressively because, as I explained, we were within a 15-minute fair value gap. I was expecting lower prices, so it could have went right away. I just decided to manage my trade more aggressively in accordance with that specific idea, right? And I'll share all my executions, don't worry about it. So what I say is not bullshit, pretty much. Following this, I would not have reshorted. Why? Because you should have been still short, right? And in the best case scenario, you took some profits. We had some beautiful equal lows right here. I'll just mark them out. Took some profits, equal lows being swept. Don't I have partial? There we go. Equal lows being swept in the reversal range of your manipulation leg. That is beautiful. It also aligns if we use breaker block standard deviations with terminus of your breaker block standard deviations, which are statistically the highest probability projections for pure objectives, right? So definitely this was a whatever it was 3-minute trade. You're in, you're out, you took partials, then you have your final objective at this level, beautiful equal lows, and then you just leave a runner on. And whenever you see a retracement, you're not going to stop. Why? Because as I said, I'm going to draw it a bit randomly, but we had a 15-minute fair value gap at this level. So you could allow it to retrace there, right? Just put your stops break even, maybe slightly in profit. You don't want to see it trade all the way back here. Then place them at the highs of 933, right? Retracement into a fair value gap. You want to see the implied dealing range once again? Well, I'll show you with this specific trade idea, Darrell. Right here, I place the high of my dealing range. Well, it's not a dealing range, but the high of my Fibonacci at the high of my framework. So I'm trying to trade a move from this high, which I believe will not be broken, all the way down to this specific objective. So then I'm going to draw, right now it's stuck on consequent encroachment, all the way down to my objective, and I'm going to utilize implied DR, which is basically just utilizing quarters. There's nothing special to it. I'm just moving it so I can make it smaller yet still precise. There's nothing special about it. I'm just using this and understanding, you'll see it line up again, that all my high probability entries will be above my middle line, above equilibrium of my implied dealing range. It is pretty much, I'm calling the future range. I'm saying that this will be the future range. Of course, we're going to take out my objective, but this is where I anchor my implied dealing range, and I only take entries in the top 2 quadrants. My pleasure, Terrell. My pleasure. It is one more thing to add on, which is not for everybody, but for me personally, it helps me concentrate on only high probability opportunities. And you'll find that whenever you have the right draw, whenever you have the right objectives, the right specific move you're calling, the right framework, you'll find that this always aligns. And even if I move it all the way down here, what did we do? Well, we expanded it to the final quarter and induced a slow, retrace to equilibrium before continuing forward. Of course, at this point in time, the actual range is just 2 ticks above, right? So yes, you did retrace to equilibrium, blah, 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 into your 15-minute fair value gap, whatever, right? But if you utilize this in advance, you could have predicted this and adjusted to it. I'm not going to go more in depth about the implied dealing range because this is something I go very in depth in my mentorship, and I pretty much only have students in here. Almost. Sorry about him, Frag. But on that note, that is it for this specific move, right? So as I pointed out, you would have wanted to hold a runner and hold it, honestly, the whole day almost. I usually like to take off my positions before lunch because I tend to be away for the afternoon, right? So that's the only thing that I would point out. And yes, there was multiple re-entry possibilities, 1,000 different ones, whatever is my honest answer. You should not care, right? The biggest one is definitely this. You'll see SMT here, which means that this candle, this last down close candle, is actually a breaker block. And if you look at the consequent encroachment of this, it is beautiful. Fair value gap right here would have been your entry. Stops would have been at, you have fair value gap, inverted fair value gap, and fair value gap. Your stops would have been at the high of this candle. Quite a wide stop, actually. And your first objective being here, but a 1-to-1, take out one contract, which to me, I usually start with a 3 to 4 contract first position. So taking off one contract on a 1-to-1 is definitely okay. Then following further, right? But why am I not going to talk about this? Because I just talked about the 2 high probability entries that you should have been part of if you were looking for a short. If not, you missed it. It happens, but you missed it. Now, even though we took out liquidity at this specific point, we still had higher time frame objectives, right? We had the monthly open and we had the sell side liquidity below, even getting into the afternoon, which is what we're going to look into. I'm not going to look into a lunch long because, as I always said, trading during lunch is not high probability. You can get some great trades and you can be very consistent trading lunch, but my model concentrates on high probability expansions, and what is lunch, which consolidates more often than not, is not high probability. What is, though, is a lunch trade after lunch. Now, people always get confused between referring at the noon to 1 a.m. range, noon to 1 p.m., range, and the noon to 1:30 range. When do you use which? Well, I just had a beautiful chat with one of my students today, actually, and it's very simple. When your higher time frame objective, so your intraday retracement objective in a classic sell day like we had today, you're anticipating a retracement for a continuation at this specific level after seeing the whole morning trend lower. At least that's what I was looking for. Now, you would utilize premium and discount. Oh, there we go. Premium and discount to figure out that, hey, my first discount, my first premium in efficiency is a fair value gap here. But if I go into 5-minute, you'll find that I have an order block right here. But anytime I'm looking at intraday, I like to utilize the 15, right? This is nothing new. Right now, it does seem very cherry-picked, if I can say so myself. But if you use this range, then you understand you're returning back into it. but on the 15 just looks beautiful, and that is what I utilize for intraday movement. Definitely. Let me just return. So to get back on track, whenever our objective is met during lunch, I understand that price will refer to the noon to 1 range for a possible lunch framework. Now for lunch rate to be present, I need it first to take out the high of my range, which it has, right? I'm not going to extend it all the way here. I'll just mark out my little X at this level. We have taken out the highs of my time-based range. So now you can target the lows. That's simple. All it needs to do is align with your bias, right? Align with your understanding of price, and I expected a continuation. So you would have had a model here. Personally, didn't trade it. I was done the morning. I was very happy with my first morning short and then continued on my eval to get basically a consistency blockout. So I made the most amount of money you can make on the top set of accounts, right? So if you guys are familiar, you'll understand that there's a 50% consistency rule, which means you can't keep going when you can't have a day where you make more than half of your profit target when you are in eval phase, of course. Form this breaker. Once we broke this low, market structure shift, aligning. I feel like I say that every single day, right? I'm showcasing every single rise model every single day. So hopefully this is nothing new to you guys, especially the lunch trade, which I've been showcasing on Twitter quite a lot. But you'll see a beautiful setup entering on the unicorn, right? What unicorn? The first one. There's nothing else, right? Then we can utilize standard deviations. Let's see if we have anything that aligns to form high probability objectives. This red line is too far gone. -3. Well, whenever I see standard deviations that don't align at all, I like to mess around. So I'd utilize the bodies, which should not align that much more. Of course, 2 to 2.5 aligns with probably a discount and efficiency in this range, but I'm going to refer to the highest probability standard deviations just to gain more insight, meaning that if my R allows for it, I am going to be looking to take profit some at this level. But what are my rules to find take profits, right? To find high probability objectives? Well, if you are trading the rise model, 5-minute chart, premium and discount, my first discount and efficiency, in this case, we have a beautiful fair value gap that aligns with this liquidity pretty well. Liquidity is actually lower. So instead of targeting the fair value gap, I am going to target the liquidity because I understand that if it moves to the 5-minute fair value gap, it is going to take out the 1-minute liquidity. So see, everything aligns always. That is what forms high probability setups. Now, if we look to this partial, let's move this back. Actually, let's look at the stop. So you have inverted fair value gap, fair value gap, fair value gap. So my stop would actually be at the high of this candle. Quite large stops recently is what I've noticed compared to before. I used to have an average of 23 handles, 22 handles on setups like these, and often I get like a 13 handle, 15 handle stop. Now I'm more in the high 20s, 30s. But price moves accordingly, right? So 1.83 R to your low-hanging fruit, great, right? You don't need more. And then 4.43 to your objective, and you could have also held runners. I just deleted the liquidity because we did take it out just before lunch. You could have held until further liquidity, which, as you can see, would have reversed, because if you look at the time when your objective would have been met after this high resistance afternoon, you understand that there's 45 minutes left to the market, just over, right? 47 minutes left to the market. So what are we going to do? Well, any daily candle has to do the same thing, right? Open, high, induce a high for some fucking reason, low, retrace to a close, right? And we're consolidating within the monthly open. Consolidating on a monthly time frame looks like lower time frame expansion. So you had beautiful setups. Honestly, if I was to look at anything from this morning, just in general, I would concentrate on taking the short, just holding all the way, and then not even thinking about the PM, right? But if we talk purely rise model, you had one at 9:30, you had a you had a long into a short, and then I'm not looking at this because there's no point, right? If you are coming at 10:45 and you missed out on all these opportunities, then you should take a step back. You should not be looking for a trade and following a PM lunch trade into lunch lows right here. Beautiful setup, very ugly delivery. But whenever you see it high resistance like that, see it consolidate, I tend to just break even my trade and not have a care in the world if I get stopped out, right? So I just put my stop just above break even to cover costs, right? Cover commissions, and then just let it head to my objective or not head to my objectives. On that note, do we have any questions, right? I'm concentrating on NASDAQ because to me, NASDAQ was the weaker asset. So NASDAQ was the asset I wanted to look at, right? I had students that traded more specifically ES, but I was concentrating on NASDAQ more specifically. All framed around this daily inversion fair value gap, which provided a classic sell day. I'm not seeing any of you guys talk, so I'm guessing it was pretty clear in the... And you guys don't have any questions, right? I love it when it's simple like that. All right, well, on that note, guys, there won't be any live backtesting call this weekend. I really wanted to do one, but I'm just getting back from vacation, so I'm getting back into it. But there will definitely be one for next week. Easy, quick today. Indeed, indeed, Father. Indeed. Well, Father, that sounds weird to name you like that. I'll call you Proud. It sounds better. Well, you guys have a great night. Good luck if you are trading tomorrow. For myself, I might be trading the eval, but I will have a 2 contract total risk for the day. So if I am, I'm going to be spending 30 minutes either getting quick in, quick out, or just quick out. So you guys have a great one. We'll see each other on Sunday, and at any point in time, I'll still be in general. So talk soon, guys. Have a good one.